Assalamu alaikum and a very good morning to all our Stock Sense investors. This is Malik, and it's Tuesday, December 23rd, 2025. Yesterday's session at the Pakistan Stock Exchange wrapped up with the KSE 100 index experiencing a slight downturn. The benchmark index shed about 200 points, settling at around 17,120, which represented a modest decline of just over 0.1% from its previous close. Despite this dip, market activity remained quite robust. We saw a total traded volume of nearly 685 million shares, translating to a substantial value of over 30 billion rupees. However, market breadth leaned negative, with nearly 290 scrips declining against 143 advancers, and 55 remaining unchanged. This indicates a cautious sentiment prevailing among investors, with selling pressure slightly outweighing buying interest across the board. Turning to sector performance, it was a mixed picture. Cement stocks provided some much-needed support to the market, contributing a positive push of about 0.1% to the index. However, the automobile assembler sector acted as a drag, pulling the market down by roughly 0.2%. Commercial banks also exerted downward pressure, contributing negatively by about 0.16%. Overall, while some sectors showed resilience, negative contributions from these key segments ultimately led to the day's decline. From a technical analysis perspective, the KSE 100 index continues to exhibit largely bullish signals from most short-term and long-term moving averages, suggesting an underlying buying momentum. However, a closer look at certain indicators, such as the Hall moving average currently signaling sell around the 17,180 mark, suggests a note of caution. For key levels to watch, the market finds its immediate resistance around the 170,000 mark, while strong support is observed near 160,250. On the corporate front, JDWS Sugar announced a significant final dividend of 250%. We also have board meetings scheduled for Askari General Insurance Company Limited and Pakistan Refinery Limited, where matters other than financial results are on the agenda. There were no specific last-day entitlements to note for yesterday's trading. In broader economic and market news, several key developments influenced investor sentiment. On a positive note, the launch of Zarkezi, a new platform designed to digitize agricultural finance, is a significant step. This initiative could boost agricultural productivity and formalize the rural economy, potentially leading to increased lending opportunities and improved asset quality for banks listed on the PSX. However, there were notable concerns as well. The IMF expects Pakistan's federal tax-to-GDP ratio to remain stagnant over the next 5 years. This signals persistent fiscal challenges, which could mean continued pressure on the government to impose new taxes, directly impacting corporate profitability. Furthermore, the privatization of Pakistan Air India Alliance faced a setback, with Fauji Fertilizer Company withdrawing its bid, leaving only 3 contenders. This reduces competition and could lead to a lower valuation for PIA, raising questions about the broader privatization process and investor confidence. We also saw gold hitting record highs globally due to U.S. rate cut bets, which, while not directly impacting the PSX, can influence broader investment sentiment and capital flows. Now, let's talk about institutional flows for yesterday. Foreign institutional portfolio investors, or FIPI, were net buyers, injecting about $0.26 million into the market. Conversely, local institutional portfolio investors, or LIPI, were net sellers, offloading approximately $0.26 million. Delving deeper into the local landscape, individuals were the strongest net buyers, adding over $2 million, followed by companies with nearly $1.2 million in net buying. Overseas Pakistanis also showed interest, with nearly $0.7 million in net buying. On the selling side, broker proprietary trading led the pack, with over $1 million in net selling, closely followed by mutual funds, who offloaded nearly $1 million. Banks and DFIs were also net sellers, with over $0.8 million. This indicates that while foreign institutions showed slight buying, local institutions, particularly brokers, mutual funds, and banks, were largely offloading positions, with individual investors absorbing some of that selling pressure. My take on the market's moving yesterday suggests a day of consolidation, with investors digesting various economic news and corporate updates. The slight dip in the KSE 100, despite reasonable volumes, points to underlying caution. The mixed sector performance highlights a selective approach from investors, favoring some segments while pulling back from others. The institutional flow data reveals a fascinating dynamic, with local individuals and companies showing buying interest, while some institutional players booked profits. Investors should keep a close eye on upcoming economic indicators, any further news regarding the privatization efforts, and the global commodity markets, especially with gold at record highs. These factors will likely play a significant role in shaping market direction in the coming days. That's all for today's Stock Sense Morning Brief. Thank you for tuning in. Please remember, this brief is for educational purposes only and should not be considered investment advice. Always conduct your own research or consult with a qualified financial advisor before making any investment decisions. Until next time, happy investing.